Welcome to Goldstone Finvest. I am Prabhat Majumdar. Goldstone has always impressed its audience by providing unbiased and perfect research to its audience. Now, we are coming up with IPO series wherein we would be sharing our research on current IPOs, wherein we would share details about running IPOs. And today's script is Kalyan Jwellers. Kalyan Jwellers, incorporated in 1993 by founder T.S. Kalyanaraman, Kalyan Jwellers India designs, manufactures and sells wide range of gold-studded and other jewelry products across various price points, ranging from jewelry for special occasion such as weddings, the highest selling product category, to daily wear jewelry. It is one of the largest jewelry companies in India based on revenue in FY20 with 5.9% share in organized market. Its shareholders include Hydel Investment, Mauritius-based private equity fund belonging to the Warburg Pincus Group. Kerala-based jewelry company Kalyan Jwellers India opens its maiden public offer for bidding on March 16 Tuesday with a price band of 86 to 87 per share. Majority of experts advised subscribing to the IPO given the brand value with a strong distribution network, diversified product offering and hope of better performance going ahead, but some feels it is a bet for risky investors given the high pricing, competition in jewelry business and volatility in gold prices. The company is planning to raise rupees 1175 crore through its public issue that will close on March 18 Thursday, and of which 352 crore already raised through anchor investors on March 15 Monday. The IPO comprises a fresh issue of 800 crore and an offer for sale of rupees 375 crore by existing shareholders. The net fresh issue proceeds are going to be utilized for working capital requirements. Experts advise that the upper price band of rupees 87, the pricing is on the higher side, but on a long-term basis, Kalyan Jwellers are available at 1 year forward. Estimated PE of 25x, given forecasted improvement in profitability and balance sheet, India's appetite for gold, strong pan-India presence, brand recall and diversified product offering. We assign a subscribe rating on a long-term basis. Our team also recommend to subscribe this issue as the company has established brand value with a strong distribution network and pan-India presence with a wide range of product offerings for a diverse set of customers. The IPO is reasonably priced as compared to the peers and long-term prospects of the company looks promising, the brokerage feels. Kalyan Jwellers enjoys pan-India presence with 107 showrooms located across 21 states and union territories in India, and also has an international presence with 30 showrooms located in Middle East as of December 2020. Last few years, Kalyan Jwellers has aggressively expanded the store. Going ahead, one can expect revenue and profitability to pick up led by high contribution from new stores. Its current debt equity ratio is 2:1. After the IPO, DE will be led by fresh issue, better international accruals supported by new revenue generation from CapEx undertaken and new expansions to be funded by IPO proceeds. Going forward, researchers also believe that Kalyan Jwellers would perform better on the back of a strong brand and number of stores in India and internationally. Thus, it is recommended to subscribe rating on the issue. Risk concerns weigh more over rationales to invest in this IPO. Hence, we recommend risky investors can subscribe with caution. Our research team sees high competition from both organized and unorganized players in the Indian jewelry industry as the Majority of the jewelry industry consists of unorganized players who have historically dominated a large part of the market. Although their shares of the market has been falling and is expected to continue to decline. Additionally, we also believe the jewelry business remained quite risky and volatile gold prices. Experts advise that observation made on valuations passed at upper level price band. The issue is asking for a market cap of rupees 8,961 crore due to incurred losses in FY19. Even for a period of 9 months ending December 2020, we cannot analyze last 9 months EPS to evaluate on analyzed price earnings ratio. And we believe the ask valuation indicate this IPO offer is fully priced on industry average. So conservative investors can give a miss on this. During FY 18-20, the company reported a 2.1% CAGR decline in consolidated top line in FY 20. The key driver for lower business growth was the domestic operations, contributing around 78% to the total revenue, which declined by 2.5% CAGR. Middle East operations also declined by 0.7% CAGR. The reported PAT was flat during FY 18-20. In FY 20, Kalyan Jwellers reported a positive cash flow from operating activities during FY 18-20 with an average operating cash flow of around 583.8 crore. Average ROIC and ROE stood at 8.8% and 4.6% respectively. Here are 10 key things you should know about the public issue and the company. IPO dates. The bidding for the initial public offering will begin on March 16 and the last day for subscribing to the issue will be March 18. Price band. The price band for its public issue was fixed at 86 to 87 per equity share. Public issue. The rupees 1175 crore IPO consists of a fresh issue of rupees 800 crore and an offer for sale of rupees 375 crores by existing shareholders. Promoter T.S. Kalyana will sell shares worth rupees 125 crore and investor Hydel Investment will offload rupees 250 crore worth of shares via offer for sale. The company has reserved rupees 2 crore worth of shares for its employees. Investors can bid for a minimum of 172 equity shares and in multiples of 172 equity shares. Thereafter, the minimum application size is rupees 14,964 at the higher end of the price band. Half of the issue size has been reserved for qualified institutional buyers. 15% is for non-institutional investors and the rest 35% is for retail investors. Objectives of the issue. The company plans to utilize the proceeds from the fresh issue for its working capital requirements and general corporate purpose. Objectives of the issue. The company plans to utilize the proceeds from the fresh issue for its working capital requirements and general corporate purposes. Company profile. Talking about the company profile, Kalyan Jwellers started its jewelry business in 1993 with a single showroom in Thrissur, Kerala. Since then, it has expanded to become a pan-India jewelry company with 107 showrooms across 21 states and union territories in India. The company also has an international presence with 30 showrooms in the Middle East as of December 2020. All of its showrooms are operated and managed by the company itself. Indian jewelry business contributed 78.19% to the company's revenues in FY20 and exports accounted for 21.81% for the 9 months ended December 2020. Contribution of domestic business to revenue stood at 86.21% and exports at 13.79%. The company also sells jewelry through its online platform. Strengths: Kalyan Jwellers is an established brand. It is one of India's largest jewelry companies with a pan-India presence on the basis of revenue for the year ended March 2020. The company's hyper-local strategy enabled it to cater to a wide range of geographies and customer segments. Its grassroots My Kalyan customer outreach network is a key element of its hyper-local strategy, enabling it to be a neighborhood jeweler and is focused on marketing and customer engagement across urban, semi-urban and rural areas in India. It has visionary promoters with strong leadership and a demonstrated track record supported by a highly experienced and accomplished senior management team and board of directors. It has a wide range of product offerings targeted at diverse set of customers. The company has established a robust set of operational and control processes to manage the business operations and to support the future growth at both the showroom and corporate level. Strategies: Kalyan Jwellers intends to leverage its scalable business model to expand the showroom network and diversify channels of distribution. It intends to widen product offerings to further increase consumer reach. It intends to leverage its My Kalyan network to deepen customer outreach and strengthen the distribution network in the core markets. The company intends to continue to invest in customer relationship management, strategies, campaigns and technologies to analyze and manage customer interaction and related data throughout the customer lifecycle, with the goal of creating a long-term relationship with customers, building customer retention and driving sales. Financials. Talking about financials, Kalyan Jwellers reported a profit of 142.27 crore for the year ended March 2020 against a loss of rupees 4.86 crore in the previous financial year and a profit of rupees 141 crore in FY18. Revenue in FY20 grew by 3.4% to rupees 10,100.9 crore. In FY19, the revenue fell by 7.4% to rupees 9,770.76 crore. In the 9 months period ended December 2020, the company posted a loss of rupees 79.95 crore against profit of rupees 94.3 crore in the corresponding period. In the 9 months period ended December 2020, the company posted a loss of rupees 79.95 crore against profit of rupees 94.3 crore in the corresponding period. In same period, revenue declined sharply by 30.7% to rupees 5,516.70 crore due to the COVID-19 impact. As of December 2020, 72 out of its total 137 showrooms were located outside South India. Promoters, shareholding and management. Founder and promoter T.S. Kalyanaraman is the chairman and managing director of the company. He has over 45 years of retail experience, of which over 25 years is in the jewelry industry. Promoters and promoter group held 67.99% in the company as of March 9, 2021. T.K. Sitaram and T.K. Ramesh are also promoters of the company and both currently are whole-time directors of the company. Allotment, refunds and listing dates. The company and the shareholders participating in offer for sale in consultation with merchant bankers will finalize the share allotment around March 23. The refund of money to anchor investors, if any, and unblocking of funds from ASBA account will take place around March 24. The allotted shares will be credited to the demat accounts of eligible investors around March 25, and the shares will get listed on bourses with effect from March 26 as per the tentative schedule in the company's prospectus. Recommended by Goldstone Finvest. For regular updates, like, share and subscribe our YouTube and Telegram channel. Also follow us on Twitter and Instagram, and also be a part of our Facebook family. Views by Goldstone Finvest. Let's build fortune together.